Hello and welcome to another episode of From the Helm live here at the ASX Small and Mid Cap Conference Day. I'm Grady, Wulff, market analyst with Bell Direct. Now, TWR is a general insurance company. They provide insurance services for everything from home, contents, travel, boats, everything. You name it, they cover it. And today I'm thrilled to be joined by the CEO, Blair Turnbull, to discuss everything about TWR. Blair Turnbull, thank you for joining us today. Now, TWR, it's a business based in New Zealand. Can you tell us about the company for our investors who may not be familiar with it?
Sure. So TWR is actually 155 years young.
Very young.
I'm not that old.
You're looking great.
And look, we look after around about 330,000 customers,
Wow.
both in New Zealand and across the Pacific. And we look after people's lovely homes, cars, boats, bikes, furry animals. So pretty much everything for general insurance with a particular focus on personal lines and small to medium-sized businesses. Now,
premiums have been the talk of the markets right now, and it's actually a really good thing for earnings for different companies and growth on the earnings front. How have premiums helped TWR on an earnings front in recent years?
Sure. And it's worth reminding ourselves how premiums come about. They reflect risk and macro events.
High risk at the moment.
And last year there were a lot of weather events in New Zealand. So, the increase in premiums that people have seen, and we do appreciate it's been hard on around affordability over the last year, have reflected higher costs of reinsurance, which is insurance for insurers, as well as inflation and heightened crime, unfortunately, in New Zealand. Now, the good news is that as we look forward, we have seen reinsurance markets settle a little bit, and we had a very good announcement this week around our reinsurance program for next year, which is particularly robust. Inflation is levelling off. Thankfully, crime is levelling off. So I think as we look forward, touch wood, I do think people can expect to see more level increases in their premiums.
That's what everyone wants to hear. Investors like their earnings growth, though. What are the biggest drivers for TWR's revenue? So what divisions are you seeing are the biggest drivers right now?
What makes TWR different is that we're a direct insurer, so we don't pay big, heavy commissions or brokerage like a more traditional insurer. So we're direct to consumer, and we invest heavily in technology, digital, and data to really drive an efficient, effective business that's very streamlined. And so we're all about right customer experience, right risks, right price, manage that margin really well for our customers, communities, and of course investors.
Now, you did mention the weather events last year. Now, there's been a lack of weather events this year, so that does lead to pretty good profitability for TWR. What are some other key highlights of FY24 so far, given you haven't reported the whole year yet?
Yeah, we did say around 2 weeks ago that it is our intent to do a capital return to shareholders of around about 45 million. That does reflect that. In sharp contrast to last year, we had lots of large events. We do provision for that. And this year we haven't had any large events. So it is our intent to return excess capital to shareholders, subject to tax and shareholder approval early next year.
Now, the market always loves to hear an earnings upgrade and guidance upgrade. And you recently announced an earnings guidance upgrade. What was the reason for this?
Essentially we've had 4 guidance upgrades.
This year, so no worries.
But the key point of that is the underlying business for TWR is strong. It is resilient. It's very targeted growth, driving a lot of efficiency through the business. And that has started to reflect in improved underlying earnings. And it hasn't just happened over the last year. But with last year's large events, you didn't see that shine through. You're starting to see it shine through. Half-year results this year, we did report 36 million underlying net profit after tax, and that was up significantly on last year, which was much lower, reflecting the large events.
Now, you recently completed a strategic review. What was the outcome of that?
So the strategic review was detailed by the board about this time last year, and it was a question of saying the board wanted to ask, as they do, what's the optimum shareholder shape for TWR to set us up for success in the future. So we went through a strategic review, quite transparent about that. There was no predetermined outcome. The board did announce just recently that's completed. They're very comfortable with the way that we're set up. So in some ways, it's business as usual. I'm always focused on the business, and that just continues.
Absolutely. Now, what does the next 12 months hold in store for TWR?
In some ways, it's exactly what we've been doing. Really targeted growth, right risks, right price, risk-based pricing, investing in a really beautifully simple customer experience, a real ruthless focus on operational efficiency, enabled through technology, digital and data, streamlining the business, and then making sure the business is always resilient. So it's as we look forward, same. It's continued improvement in Tower.
Blair, thank you so much for your time today, and I hope you enjoyed that episode of From the Helm. I'm Grady Wulff. If you did enjoy it, why not subscribe to the Bell Direct YouTube channel?